leading brand in the drinking water segment. So these are our major brands. And okay, I'll just run through the Malaysian bottled water industry briefly. So actually, we can divide that into two segments: the natural mineral water segment and the drinking water segment. Just some comparisons. So for mineral water, right now there are about 10 plus or so active producers with many brands. Whereas for drinking water, there are more than 200 producers with many brands. So why so? Well, could do that later. For mineral water, we have very stringent regulatory requirement. For drinking water, it's also stringent because the water source for both also must be approved by Ministry of Health. For mineral water, of course, you have some health benefits with assortment of minerals. For drinking water, the process is usually RO. After going through the RO process, basically there is not much mineral left. It's very close to pure water. And for mineral water, we're using underground source. So this is crucial because you need to have a very good source. So for drinking water, the source is usually tap water. So, and for mineral water, we can command a higher selling price, and of course, lower selling price for drinking water. If you know the business, so to produce 1 carton of mineral water, the cost of producing 1 carton of mineral water is quite similar to the cost of producing 1 carton of drinking water. You need the bottle, you need the cap, you need the label, you need the paper carton and things like that. So the selling price will determine our margin. For mineral water, we have higher entry barriers because basically you need to get the underground source. That is the difficult part. For drinking water, of course, less stringent. And how do we differentiate mineral water and drinking water? Mineral water, actually, we use color cap. So those with color caps are actually mineral water. For drinking water, white cap. So this is a very easy way of identifying which is which. Okay, we have two segments here. Basically, the drinking water segment outsell mineral water in volume. Yeah, because basically drinking water is much lower price, so they can sell more. But in value, I believe the mineral water segment could be higher than the drinking water, because for instance, like a Spritzer, our selling price is easily 2 times the selling price of a drinking water product. So that is for the industry. But for us in Spritzer, we have 2 mineral water plants, one in Taiping, one in Yongping, and we have a drinking water plant in Shah Alam. Our proportion is like 70-30. 70% mineral water, 30% drinking water. Okay, that is the industry. So let's look at our corporate structure. Very simple, all 100% owned, so no MI, and of course, no profit leakage. And we have just quickly run through them. Engineered is in Yongping is a mineral water plant. Then coming down is a Spritzer Eco Park. Many people has been to this place. And pet mask, we have a pet mask. We produce our own pet preform. We buy pet resin and we produce our own preform, but not 100%. We still need to buy from outside. And coming over to this side, we have Chuanxin Cactus. Oh, I forgot the main company, Chuanxin, on top. Chuanxin is actually the main company of the group. It has 2 bottled water plant, one in Taiping, one in Shah Alam. So that is the main company. We have Chuanxin Cactus. Chuanxin Cactus is doing some distribution in Perak State and surrounding area. And we have a Golden Pet. Golden Pet is a plastic manufacturing plant, and they produce caps, preforms, bottles for in-house consumption, and also they have some external sales. So in our revenue, we do have some non-bottled water sales. So roughly, as last financial year, the proportion is something like 97%, 93 a bottle products, and the other 7% non-bottled water products. So we ventured to China. We set up a company via Hong Kong company, Spritzer Hong Kong, and we actually started selling our products in China in 2016. But China is giving us our problem. Maybe I'll explain that later. Okay, let's look at the next slide, corporate milestones. We started in the year 1989 as a very small producer in Taipei, not in the existing plant. It was something somewhere nearby. And we are a pioneer in this industry. So in those days, the bottled water companies are no longer around, except there's another one, which you may remember or you may know. It is Alpine. Alpine is a Johor manufacturer. The company name is MP Mineral. MP Mineral, their main brand is actually Alpine. So they are still around. They together with us, they started together with us in 1989. Okay, we moved to the present Taiping plant, which some of you may have visited. This in the year of 1994. Actually, we actually applied for listing in that year, in 1994. But the first submission we didn't go through, okay. And then in year 2000, we got listed. We got listed on actually 1st September 2000. In between, actually, from 1994, 1997, we actually submitted a second submission, but that was during the Asian financial crisis, where they freeze all new IPOs. So when they allow IPO again, then we went in another time in year 2000 and year maybe 1999 and year 2000 we got listed. And that time was a second bond. Of course, later it becomes the main market. Okay, in year 2001, we acquired our second mineral water plant in Yongping. It's a very small setup. It's actually, they actually have this brand called Desa. Just now I mentioned this brand, and actually we took over the brand as well. So we have Desa. This is the Yongping plant. In the year 2010, we started drinking water production at Shah Alam. So we had a plant in Shah Alam in Section 33. So we produced summer drinking water there. So this plant gave us some problem initially because startup costs and sales were low. So we incurred some losses. But it started contributing in the year 2012 onwards. And it's doing okay, doing good now. And in the year 2016, we went to China. China is giving us our headaches. I'll talk about that later. So, and let's move on. Yeah, this is our factory. It is this is a typing factory on a 330-acre site. So at the back, you see a tall building in green. That is our new automated warehouse. I'll show you a video later. ASRS is completed, but not officially hand over yet. We are actually trying that out. A little bit of problem here because of MCO and things like that. There's a slight delay in the commissioning of this automated warehouse. We have a capacity of about 15,000 pallets. 15,000 pallets, quite huge. We are the only mineral bottled water company plant having this automated warehouse. I also understand that FNN is also having one soon. but theirs is a much bigger capacity. Okay, so let's run through some facts and figures here. Of course, Spritzer is the #1 natural mineral water brand. I mentioned Cactus. Cactus is also is the #2 mineral water brand. Of course, other brands you may be familiar: Ice Mountain by FNN, Dasani by Coca-Cola, Alpine I mentioned just now, Spring Fresh, Ocean, and things like that. But they are the market share is actually relatively smaller. That is mineral water. So Spritzer Group is the most integrated and the largest bottled water producer in Malaysia, and with more than 40% market share. We are the largest, okay. Malaysian books of record say so, and we are also the most integrated because we produce our caps, our preforms, our bottles, and also the handle. So basically, we do all of this in-house. So you will see why our non-bottled water sales is quite low. It's just now I mentioned about 7% of our turnover, because a lot of sales actually consumed internally. So not that our plastic manufacturing plant not doing well, doing bad. So basically, there's a lot of in-house or internal consumption. So we have 3 bottled water plants with 16 production lines, and also 1 plastic manufacturing plant. Our workforce is about 850, and we are the first and only natural mineral water company listed on Bursa. So if you remember, I think in the year 2007, we got listed in 2000. In the year 2007, there's another bottled water company got listed. That was actually BioOsmo. BioOsmo, now he has changed his name to Impiana. They are not doing any bottled water business, no longer in the bottled water business. They were actually from Johor, and they produce drinking water, focus on the Singapore market, but then not doing so well. So now, so we are the only one pure bottled water company listed on the Bursa. Our annual sales, annual turnover is about 350 billion, and our annual capacity, we can produce about 750 million liters. So since 1989, we have more than 30 years of manufacturing and branding excellence. We actually have won very numerous awards and accolades. Okay, this is our revenue. 2011 is still around 150 million, and it has now moved to 370 million in the year 2019, growing every year. The initial years, the growth rate were much higher, double digit, but now we probably can manage a single digit growth rate. And our profit after tax is profit growing. Earlier years just quite low, less than 10 million a year, but sales profit picked up in year 2010 actually. 2010 was we actually made more than 2011. 2011 and were affected by Shah Alam. We acquired the plant, our plant in Shah Alam, so Shah Alam was loss making. So dragged down our earnings. So, and then the profit gradually moved upwards. And you see a dip in the year 2016. That was the year we went to China. We lost some money there. In the initial year, we lost about 10 million. So we are still losing. In 2019, our loss is just over 2 million. So what happened to 2020? 2020, things improved, but because of COVID-19, China also affected. They are of course, they're the first to be affected. So 2020, we may not see our China operation breaking even, not yet. So but things are actually moving on the right track. We are doing fine. So basically, these are our profits and some financial highlights. Just comparison between 2018 and 2019, and you can see our basic earnings per share is about 15 cents. Our net asset is about 198. Our share price now is just 190. So our share price is actually lower than our book value. So price over book value is less than 1. And if you are using 15 cents as EPS earnings, as EPS, and with our share price of 190, the P is probably just about 12 to 13. So P quite low as well. Yeah, you compare with Nongfu, the company that is just recently listed. I understand the P is around close to 40. But Nongfu is a different animal. Comparison is not fair. Nongfu has they say in their prospectus they have about 21% market share in the China bottled water industry, and our market share is twice, but ours is in Malaysia, so it's very, very different. Okay, that is some financial highlights, and these are the recent numbers, and you can see our first quarter this year, we are doing okay. The numbers are quite consistent with 2019, but in the second quarter we have a big headache because of MCO. We are essential products. We actually are allowed to operate throughout the period. So, but then with about 50% of our workforce and things like that. So this MCO actually affected our sales very much. A lot of shops, businesses were closed. So actually sales dropped by, if you compare Q1 and Q2, dropped by 41%. And that bring down our profit, and also, yes, very much, because we just don't have the volume to actually bring the cost becomes higher if you have a lesser volume and things like that. So EPS for second quarter 1 cent only, whereas for first quarter is about 4 cents. So for first half we have 5 cents. So last year 15 cents. So 2020 it will be a challenge to hit that number. Whether we can do 15 cents, it will be a challenge. And you can see with lower revenue, the net margin also affected. Our net margin still single digit. Actually, Nongfu net margin is actually very puzzling. They have double digit. Their net margin, if I remember correctly, is about 20%, which is substantial, which is very, very substantial. And even people like Nestle Waters and Danone, the two leading global players in bottled water, their net margin is just around 11 to 12%. So Nongfu can do 20%. That is fantastic. But that was in year 2019. Okay, these are the recent numbers. So things improved after the when at the start of the RMCO recovery at MCO. In fact, sales picked up in June and gradually, and July were good. August improved. September even better because of the water disruption in Klang Valley, and now we are facing another water problem in also Selangor. So I suppose these 2 days our sales should be good. Just a sales surge, just for a few days. So after that, things back to normal. So that is a little bit of our sales now. Okay, let's look at what are the awards and accolades we got. Superior Taste Award. Okay, Spritzer taste tastes good. So we actually have a Superior Taste Award. So this has 3 stars. So you can actually see this. They actually have 1 star, 2 star, and 3 stars. 3 is the max. So we got the max. The other one is Reader's Digest Platinum for Spritzer brand. We have been doing this. We've been winning this every year. Close to 20 years, I think. So for Spritzer brand, we got the platinum. For Cactus brand, we got the gold. So this is by Reader's Digest. And there's another good one, this World Branding Awards. We got it quite a few years. People like Maybank got it as well, and Asia, and the soon to be listed Mr. DIY also got this award. So this is the brand of the year, World Branding Awards. It's a overseas award. We normally receive such awards in ceremonies held in London or Paris. Okay, that is the World Branding Award, and the other one is Putra Brand Awards. This is also a very significant award. We are competing with people like Milo and 100 Plus and Nescafe. These are all big names. And in 2018, we actually got the gold, but 2019 we just managed to get the silver. But and Nescafe got the bronze in 2019, so not bad. Of course, we are the largest mineral water company in the country, so we got this Malaysian Books of Records as well. Okay, this is our Spritzer Eco Park. We've been to our plant. You probably see this. This is just in front of our plant. It's a recreational park. Yeah, we have a mini golf there, and basically a lot of visitors been to this place. People from Perak and elsewhere also come and visit us, and we conduct a plant tour for visitors. So in the morning and in the afternoon. But because of MCO, this plant tour has been suspended temporarily. So this is our eco park. So these are the facilities there. Mini golf, and we have a cactus rock. And of course, besides superior taste, we also have very good health benefits. Silica-rich mineral water. We have, okay, let's do this. This is Daily Express. This is way back in 2012. I think it's October 2012, and came up in the cover page. This professor from University of Kiel, Chris Exley, actually we supplied the water to him, and he conducted research and he conducted tests, and he did some a lot of work on silica-rich mineral water, the effect on silica-rich water on the removal of aluminium from our body. Apparently, aluminium is a prime suspect of Alzheimer's disease. So you can read more about this from our website. I won't go through the details, but basically consuming Spritzer mineral water helps to remove aluminium from our body. Okay, let's quickly run through some of the business and financial outlook. Yeah, it's pretty challenging, 2020, especially with the health pandemic, and also the consumer sentiments, and of course the volatile ringgit, also recovery uncertainty. But we have a substantial market share, and even a very difficult quarter, our second quarter, we have managed to make a profit. So things improve in the second half, and it looks like sales-wise, second half would likely to be better than first half, because the second quarter was quite bad. you remember the numbers actually was around 54 million revenue. So our revenue should be around 80-90 million per quarter. So we can, I think we can do better than that second quarter. Of course, we have higher cost of doing business, minimum wage and things like that. We will continue with our brand investment and capacity growth with greater automation. We have 16 production lines, and our fastest line is capable of producing 36,000 bottles per hour. Very, very, very high capacity. But I heard the Nongfu lines, Nongfu Springs line actually double that. Oh, just imagine 80,000 bottles per hour. And we believe our revenues and earnings are sustainable, notwithstanding the problem in China and also maybe COVID-19. We think if there's a dip in that, there should be only a slight dip in 2020. Of course, this is again a bit uncertain, recovering domestic demand, because with the new number of COVID cases, things don't look that good. We really have a strong branding. Brands are all leading brands in the various segments they operate. We are cost efficient. We actually have large volume and we are automated. We have very strong balance sheet. We actually have some good cash in hand as of June. So if you look at our balance sheet as of June, in the second quarter announcement, we have a cash in hand, as well as another item. Some of you may miss that out. Basically, we have investment in, there's short-term investment. It's classified as short-term investment because we invest in this cash fund. In this cash fund, so it's classified as short-term investment. That is quite substantial. If we add up the numbers, this short-term investment plus cash in hand, and if we minus our capital commitment and also minus the dividend that we paid out in August, we still have about 50 million for available for use. 50 million. It's very useful now with this cash in hand, especially now, because cash flow is very important, right? And we are using sustainable packaging. We actually trying to move. We will do more on this. If you follow our news, you will know we actually have introduced plant-based packaging material for some of our products, especially the Spritzer products. We also have Tetra Pak for Spritzer, and we are trying out with rPET, recycle PET. So the complaint on bottled water is actually the plastic bottles that we produce. There's so many. Okay, so we probably have to work on this, on sustainable packaging. We are working on this, and let's turn to the next slide. This is on our competitive advantage. Beverage, as you know, is resilient. Water is essential, and bottled water actually outsell carbonated soft drinks in the US and some European countries. In Malaysia, not yet. It's still far away. So, but then, well, it's likely one day bottled water would also outsell carbonated soft drink here. And we are the largest and most integrated and leading bottled water producer, and with very dominant market share. We have highly recognized silicon-rich mineral water source. Current valuation now below NTA, PE low, and of course, China is also giving us a problem. Once China is able to break even, our numbers will improve very much. We have very experienced management. We are the pioneer in this industry, and we know the business very well. We've been through some successes and failures, and since 1989. So yeah, we are good, but self-praise is no praise. Okay, we have very strong branding, and our products are quality. Yeah, quality products, and very strong distribution. We have very strong distributor. Yearly distribution network is national, is throughout the country. Also, we have other wholesalers doing the distribution for us. We have very high volume. We have economies of scale, and of course, we have a strong balance sheet. So let's go to look at some of the risks. Okay, the health pandemic can cause a lot of problem. That is a risk there. So like our second quarter, which was quite bad. So if there is a MCO 2.0, we probably will suffer again. Recovery uncertain. But there's also a brand and reputation risk. Our brand, we have very high value, so we need to make sure our reputation remains good. So we pay attention to this. So higher input costs and operating expenses, and the China operations remain unprofitable. And this question a lot of people ask, whether our water sources will dry up or not. Yes, theoretically possible, but not probable. So I can explain a little bit here. Basically, when you extract water from underground sources, there's a discharge rate. The water will flow back to that area, to the water source. The water will, there's a recharge rate. So if your discharge rate equals to your recharge rate, theoretically you have a perpetual well. How to maintain this equilibrium? How to maintain this discharge rate equals to recharge rate? So when you pump the water up, you pump it. You control the pumping rate, so you don't over pump. If you see water not flowing out very much, you slow down the pumping rate, or you maybe have to rest the well, and hopefully the water will flow back in. And if you manage that well, probably you have a perpetual well. And we moved to this plant in 1994. If you remember, just I mentioned in 1994, our first well that we used, and there's still a water supply. So after that many years, so but a lot of people also ask about this, whether there's any water reserve there. This is difficult questions. We cannot, we have no way to measure the reserves underneath, because water is flowing underground. It could be a huge underground lake, or it could be a river, something like that. But this is something which we can't tell. Okay, we have superior quality. Our silica-rich water is good. And the other risk is actually water quality. Water quality could be a problem. If you remember, last year, there is some water which is not allowed to enter Singapore. You remember there's a brand from a manufacturer in Johor. They have problem. Singapore say they have condemnation. So, but I think the matter has been resolved. So quality is important. So make sure our quality is good. And of course, right now, the players are not really strong. We don't have very strong competitors. I'm not saying Ice Mountain is not strong, but they are focusing on their core products. Similarly, Dasani is an international brand from Coca-Cola, but then they are not focusing very much on bottled water. So on one day, if they try to focus on this bottled water, we could face some stiff competition from these strong players. So the other players are very regional, smaller scale, and not as powerful yet. Okay, these are the risks, and some of the recent activities we are involved in a lot of these jobs. This is in Pulau Dioman. We recently went to Pulau Dioman. We did the beach cleaning and coral replanting. What is this coral replanting? We should go down to the seabed and put up a structure there and plant coral. So then later the coral will grow. Something like that. Very interesting. We have some video. Okay. We also do this. Recently, we employed some 10, to be exact, 10 people, 10 prisoners from the Kamunting jail. And one sitting with my boss, next to my boss was the assistant DG from prison, from Kajang. So this is a very recent one. And of course, COVID-19, we made a lot of donation to hospitals, to the police, to the custom, and things like that. This is the COVID-19 donation. Okay, briefly, I want to tell you what are we doing, how are we running this business. Basically, this business of ours, we are in an FMCG, so branded business. So we need to deliver good quality. Yeah, so that we need to deliver, and of course I want to create, amplify our brand awareness. Branding is significant. Nowadays, people trust the brand. So we have trusted brands and things like that. So we will continue to invest in brand building. And of course, with the extra volume that we can generate, we would want to expand our reach and availability across the segments. Because the more places that you can find our products, the easier for the consumers to buy our products, and we will improve our business. So we will further drive operational excellence, for cost advantage, and we reflect, we internalize channel, and also look at consumer feedback and things like that. We reinvest. We put back our earnings into the business. We invest in R&D, in product, and people, and processes. So basically, this is what we believe. This is what we are doing on a daily basis, and we keep improving, keep delivering, keep doing better. So hopefully one day you continue to grow. And now let me show you this. This is the automated warehouse, the newly completed, but not handover. I have a video clip here. You probably will find it interesting. automated warehouse. Actually, pretty impressive. The small AGV that is moving around, we have 31 of them. So not officially hand over to us yet, but it'll be soon. And okay, I've come to the end. I hope everyone stay hydrated with Spritzer. Spritzer, and thank you very much. Maybe we can go to the Q&A session, and I can take some of the questions.
Thank you very much, Mr. So, for your wonderful presentation. So we see a question from Capital Dynamics. So they're asking, what are your sales and marketing expenses as a percentage of revenue for FY 2017, 2018, and 2019?
Yeah, our normal NP expenditures are actually around 5% of our revenue as a percentage. But if you go back to 2016, we spent much more because of in China. We ventured to China, but on average, it's around 5%. 5% is actually a big number. Yeah, you only probably see us advertising. Probably only bottled water company continue to see our advertisement. Okay.
We have the next question from Jackson. How much have you invested in the new ASRS warehouse, and what kind of return are you expecting from this investment?
Okay, the total investment cost is actually above 60 million, which actually we got the funding from a private placement we carried out in 2017. We took in a new investor, Diamond Asia, in 2017, and the building costs around 30, and the other part also around 30 plus. So it's actually 60. And we will not be able to recover the cost that fast, because basically the warehouse could be slightly underutilized in the initial few years. But going forward, basically there should be cost savings. In the year, say in the first few years, probably 2 or 3 years, we probably with a manual system, we probably spend less. It will probably cost us less. But then going forward, we need to move to this automated warehouse. We can't handle the volume already. The volume is just too big for us to handle. And you know, when on a peak, basically a warehouse is operating non-stop. It's like morning 8 a.m. and then sometimes until midnight, and sometimes until maybe 3 a.m. You know, just have a short break, and then the next lorry come in again. That kind of situation is very difficult to cope. And basically, with an automated warehouse, you see just now, we actually will reduce the carbon footprint as well. So this is in the long term, operations will be probably more efficient with the automated warehouse. Okay, that is all right. I hope that answered that question. Yeah, what's the next one?
Someone's asking about China. Actually, there are a few questions in regards to China. So the first one is, how is the expansion going on in China? And in terms of market share, how big is Spritzer over there? And there's also a comparison with Nongfu. What is Nongfu doing right, and Spritzer's next step?
I've mentioned Nongfu is a different animal. We are nowhere close to Nongfu. So they are the number one in China. We are the number one in Malaysia, and that's it. We actually have a bigger market share. Comparing them with them, we have 41%. They have just about 21%. But Nongfu is really, really huge. And you look at the operations of Nongfu, and they have plants throughout the country. They have 10 water sources. And in this business, logistic cost is very important. If you control the logistics cost well, you actually control your business. And basically, in our market share in China is negligible. You have to go to decimal places, not even 1%, that kind of thing. So we we're definitely far away from Nongfu. Of course, in general, the local beverage companies also can't command the kind of PE multiples like Nongfu, because you see our market is small, basically very small. Malaysian market is very small. We are the number one. We're pretty dominant. But going forward, we have to go regional to grow, to expand. So China is, we are just in Guangzhou. We are just in small town. Not a small town. Okay, it's a big town. It's a very huge town. But then compared to Nongfu is no comparison. And this business, you need to control two costs. One logistic, the other one is packaging cost. You control these two costs well, then your business would be good. Okay, that is on the.
There's another question in regards to China. So when would you expect China operations to break even?
We can't break even in this year. So we have COVID-19. So basically, sales numbers are growing well. And actually, besides water, we also do distribute other products to actually provide a bigger range. So 2021 would, well, we may if we can't break even, it will be very close to break even. So we have been there for more than 4 years. 2016, this year is 2020. 2021, we may, if we can't break even, it won't be far away. So I believe it won't be far away. By the following year, in 2022, I would think we should, because there's actually tremendous pressure on the on the CEO and also on our China team to improve their earnings. So okay, that is China, right? The next question.
So there's a question in regards to your margin, and actually it's in comparison to F&N kind of margin. Is this possible?
F&N margin definitely much better than us because their products, bottled water is actually a very low price product, and you need the substantial volume. Nongfu 20% is really difficult to imagine. I find it very difficult to imagine. So we just look at other water company like Nestle Waters and Danone. If you go to their website and check, they are just around 11 and 12%. So 20% is really out. But we also hit about 10%.
Comparison with F&N.
Yes.
F&N.
F&N is very different because their bottled water business is really they don't even break that up. You really cannot compare with their bottled water segment. You know, they don't do they don't have any breakdown
so
in numbers.
You're saying because they're selling other types of drinks,
yes,
types of beverages.
Yes, yeah, other beverages and things like that. So it's not an apple with apple comparison.
Okay. The next question is, in order to overcome the logistics cost constraints, will Spritzer move to a more premium branding position?
Okay, just look at Nongfu and look at Teapot. Teapot water is a premium branding. So Nongfu is a FMCG, it's a mass market. I suppose Teapot also probably want to do mass market, but problem with Teapot, their brand is actually Teapot 5100 is actually produced in Teapot. So from water Teapot to move to other parts of the country is huge cost. It's huge cost, huge logistic costs. And I believe when they first started, they actually sell to China Railroad, and then using China Railroad to help them to distribute the product. So they have to sell at a premium pricing. So they basically, because of their high logistic costs. Whereas Nongfu is a very different, Nongfu is a mass market. They have plants throughout the country. They have 10 sources. They have way back in the north, in the south, in Guangzhou. They also have in the even the northern part, everywhere. And Hangzhou, yeah, they have it in the West Lake, Sihu. Basically, it's a mass market product for non-food. The pricing, if you just look at their prospectus, corporate prospectus again, you see the non-food average selling price is just about 1 yuan per liter, which is very low, which is actually very low, very low. So I actually wonder how to get a net margin of 20%. I actually wonder. Okay, but here we can't have that kind of volume. I was telling you our fastest machine is 36,000 bottles per hour. That is probably one of the fastest in the country already. Not many people have this kind of speed. But non-food machines are actually two times 80,000 bottles per hour, the kind of volume. And I believe the economies scale. So difficult to make a comparison. Not easy for me to do. Okay.
And then following which, there's a question that's related to non-food, which is there a possibility that non-food will
they say they want to expand overseas. In their prospectus, they also mentioned that. But you see, bottled water market, bottled water in business is like that. You need to have your plant. If you are doing the mass market, you need to have your plant near where the market is. So if you're trying to sell, say, bring all the way from France to our part of the country, you have to sell at a very premium pricing. You have to sell at a very high price. You can't sell at the mass market price. So you to operate because the logistic cost is significant. You see all the international brands, they are all selling very high price. Evian, Warwick, Pellegrino, even Fiji. Yeah, they're coming from, they travel half the globe to reach this place, and yeah, they have to sell high price. And if you want to do the mass market, you have to set up your plant there. You have to collaborate with a local player. Yeah, how do we manage the our China operations? So we also exporting from Malaysia. We are not having a China plant, but China is not too far away. Seriously, if you look at the logistic cost, I understand that selling a container to East Malaysia probably costs more than a shipment to Hong Kong. You know, that kind of thing. So basically, we can manage that cost. So we are not selling a very, very high price, but our pricing, we can't go to the low end, lower price segment. If we go to a lower price segment, we won't make money. So that's why it's quite tough to operate in China because we lose out on the logistic costs. Okay.
There's a question on share liquidity. Are there plans to improve your liquidity?
Okay, a little bit of problem there. Okay, our public spread is just 30%. And actually, even this 30%, some funds are actually holding. And the free float, I suppose, maybe probably just around 15 to 20 only. So that would make it even worse. So how do we improve that? So sure, but we have no immediate plan. So someone was talking about the guy has an exit strategy for the PE Co. Yes, they have an exit strategy. They would want to sell one day when they have been here for 2017 December. They came in. So it's 2020 now. So they have been here for about 3 years. Maybe 2 or 3 more years they need to go. And then probably they have to dispose of in the open market. They may have some liquidity there. Yeah. So, okay. Yili also privatized by them. Correct. We are dealing with the same people. apparently, but this PE fund, they are losing money. Diamond Asia came in at 233. Right now, the share price is 190. So, I don't know, but they are still confident. They still like us. They still like the group. So they work with the owners of Yili and taken Yili private. Yes, they need to exit, but I'm not too sure of their exit strategy. If not because of COVID-19, we actually performing quite steadily. Numbers are actually improving. So share price may improve, but because COVID caused us some problem there. So we probably, I don't know. I cannot say much here because it is their exit strategy, right? Can I move to the another question?
Yeah. So, okay, what's the company's strategy to increase revenue if this pandemic prolongs and if more people are avoiding going out?
Yes, basically, we have planned to grow our market share. We have planned to grow our revenue. So we will still be aggressive in pushing out our products. So you see, we are pretty aggressive. So we will still continue to spend on A&P and to grow the market. So, Malaysia, the tap water quality is good in Malaysia and Singapore. So the industry growth rate is probably single digit. It's probably, the estimate is 6 to 8%, that kind of growth rate. So you don't see double digit growth rate here. So to grow the company, we have to look at regional. So we are also trying to do more in Singapore. We're actually selling quite a fair bit to Singapore. We want to do more in Singapore. Singapore is just a short distance away, and with our Yongping plant, it's even closer. So again, piping plant is very difficult for us to focus on Singapore, because Singapore get a lot of their bottled water from Johor. So very, very close, very nearby, and safe on the logistic cost. But we can compete with our Yongping plant. We want to do more, so Singapore is in our plan. Singapore, and the other thing is locally, we want to first of all see if we can improve our market share to 50% or higher. The kind of plan that we have. Okay.
Okay. Thank you very much, Mr. So. Thank you everyone for your questions.
Oh, there are a lot of questions.
Yeah, there are actually more, but I think in the interest of time, perhaps Mr. So, maybe we have to pick the last question if we could.
Okay, so what would you pick?
Well, maybe M&A in the pipeline, any possible one, since you're sitting on so much cash.
Okay.
Could this be a good time to buy something?
We have no plan, okay. But basically, we need to have a suitable candidate. We need to have someone quite similar to us. But the other players in this industry are not nowhere close to what we are. So we may have to do a lot of work if we merge or take over some of them, and we have to spend a lot of effort, put in a lot of time to make them to be like us. So we are quite stringent in our QC, and we have a lot of requirements. So basically, we take care of our reputation, our brand. So we don't. Even the Yongping plant that we took over in year 2001, and it takes us many years to improve. So you have, first of all, you may have to, even the existing machines that they have, you may have to sell them away and things like that. We have to go to that extent. So it's not easy to get a very good candidate. But if they are good people, we can good offers from players in and surrounding Klang Valley. That would be wonderful. As I mentioned, the business is you have to take care of the logistic costs. Taiping is still far away from Klang Valley. So though we have a plant in Shah Alam, but that is a drinking water plant. So if we find a good mineral water plant somewhere very close to the market, then that would be wonderful.
Okay. All right, I guess it's already 4:10 now. Thank you very much for sharing your insights. Sorry we can't take in every question. So the link to the slides will be shared at the chat function. They're also available on Bursa's institutional website. A big thanks to every one of you who has spent your precious time in joining us today on the webinar. Have a great evening. Thank you so much, Mr. So.
Thank you. Thank you. Thank you so much. Thank you, everyone.